Welcome back to Switzer, and tonight I'm in Melbourne. Now, when markets get a little bit crazy and they start going off the boil, I love to talk to a 24/7 fund manager like Anton Tagliaferro from Investors Mutual. And I want to know how he's playing the market right now. Anton, thanks for joining us.
Hello, Pete. How are you? Good? I'm good.
Very good. At the risk of you correcting me, how are you playing the market right now?
Yeah, as you know, we don't play the market, Pete. You play at the casino, you play at the horse track, but you don't play the market. So, look, it's tough. The market's tough. It's obviously come off its highs in the last few weeks. I think if you look at the overall market, obviously the banks have got their issues. The resource stocks, well, you can flip a coin and you can play the commodity cycle there if you like. And then if you look at many other companies, which we talk to all the time, you know, things are quite tough. The economy in Australia has been a little bit soft of late, and yeah, look, it's pretty tough out there for most companies.
Yeah. Are you seeing, as the market comes off the boil and some stocks start losing, you know, the stock prices are falling, like the banks, are you also saying to yourself, well, maybe there's a little bit more value creeping into the market? Or are you worried about the big picture, and that is that sort of curtailing your enthusiasm to pick up stocks at lower prices?
No, definitely. I think you're right. As the market comes off, you know, we're value investors and we like things when they're coming off in price. It's sometimes difficult to buy when prices are falling, but I guess you have to draw the line somewhere and say, you know, something's good value and you're happy to buy it at a certain price, even though it may be cheaper tomorrow or the day after, you know. But I guess most of the things we're buying on a 3 to 5 year view. So, you know, if the shares are a little bit below where you buy them for a day or a week or two, it's not a real problem. So, yeah, look, there is value beginning to appear in certain sectors, in certain parts of the market. It's pretty patchy, I have to say, but you know, we are finding selective value.
So you said 3 to 5 years. Now, in 3 years' time, Amazon will well and truly be in the Australian market.
If it's making enough profit to survive till then, yes, that's right, Pete.
Yeah.
Because it hardly makes a profit, by the way. So
I know,
Amazon is one of these phenomenal companies which has huge revenues and almost doesn't make much money. So it's very easy to get a lot of revenue when you don't make much money. So we'll see if they can continue like that for you know, in the long term, really.
Well, okay, but this is why I'm asking this question, because, you know, we know the retailers are being shorted, and if my memory serves me well, Woolworths was shorted some time ago and no one wanted to go into Woolworths, and they kind of proved the market wrong. Do you think JB Hi-Fi or Harvey Norman will prove the shorters wrong over the next few months, or maybe over the course of this year?
Look, I think there are a couple of issues affecting the retailers. Now, first of all, as I said, I think many of them are saying that April was a little bit patchy, you know, retail sales were slow. Some of them are saying that was due to when the holidays fell this year, you know, with Easter and etc. All the public holidays were on funny days, so they were all stocked up at the wrong time. People are saying May was a bit better, so perhaps, you know, it's not as bad as people think. But look, definitely the consumer is a bit stretched out there. But yes, I think they are being oversold. As a sector, Pete, yes, I think they are being oversold. So, for example, we have a holding in Myer, which obviously has issues as well, you know, Myer, but, you know, at 84, 85 cents on a P of 9 or 10 times, with Solomon Lew on the register, look, it does look a little bit, it does look very oversold, as does JB Hi-Fi and to some extent Harvey Norman too.
Okay, when it comes to Myer, mate, I call that a yes minister stock. Courageous decision, Minister. Anyway, let's go.
Why is that,
another.
Pete? Why is that? Do you think Myer won't be around in 3 years or in 5 years? Do you think people won't go to department stores?
No,
do you think no? Right. So
No. I just think it's a company that has continuously disappointed supporters. But I think at the current prices, it's probably looking more valuable. And the Solomon Lew argument, it has water. It's just that you taught me a long time ago there are often better companies out there than companies like Myer.
Definitely, and we avoided Myer for a long time, particularly when private equity floated it off at $4 a share or some ridiculous price. But I think Myer today is a very different animal to what it was, a few years ago. There's a new management team there. They're cutting down the number of stores. They're investing in their core stores, their key city stores like Sydney and Melbourne. They've got out of places like Wollongong and Orange or wherever. They've changed the format of their stores from home brands. They've gone into, they've put a lot of core brands in there, and people are coming back. So look, it's changed a lot, and so we think the strategy of the current management, they're on the right track. So we're quite encouraged by what's happening. Within the company, not so much the share price at the moment, but within the company, we're quite encouraged with what's going on.
Okay, well, I'm glad I baited you because you gave us some wonderful analysis of Myer. Well done, Anton. Now, what about the miners? Have you any exposure at all to the miners?
Oh, Pete, we have a little bit, it's a sort of BHP. I always say it's for decorative purposes, really, because, I'm not a big believer in resource companies. They're very volatile. They themselves don't know what they're going to earn next month, let alone next year. So when BHP say they're going to double the value of their, whatever it is, return on equity or whatever, I mean, these are ridiculous statements to be made by any mining company because they don't know what the price of iron ore or coal or copper or anything's going to be, within the next 12 months. So, look, they don't tend to make great investments generally.
Okay. Now, we know that big caps did very well late last year, even early this year, and we're starting to see the mid caps starting to improve. I'm wondering whether you're seeing any value out there in either small or mid cap land.
Yeah, look, Pete, there is value turning up in different parts of the market, but it's mainly due to, share prices are coming off. They're coming off because some parts of the economy are weak. So I guess, in a market which is now, share prices tend to react on a blow-by-blow basis to what's happening in the economy on a week-by-week, you just have to look at companies, as I said, on a 3 to 5 year outlook and say, well, will this company's outlook be better in the next 3 to 5 years than it is in this particular week? So yes, look, there are some small caps which we think are beginning to look attractive at current levels.
Okay, can you just give us one before I ask you which one of your funds you think is the best placed for the rest of this year?
Oh, Peter, these are difficult questions. But look, for example, if you take QV Equities, which is our listed investment company, at the moment we're sitting on over 20% cash, so we've got quite a bit of cash there. We're buying things on the back foot, things like Fletcher Building, which has come down significantly, mainly because of a one-off development loss in New Zealand. We don't believe those losses are going to continue, and I think on a P of 11 times earnings, 2018 earnings on a yield of over 5, it looks pretty good. Companies like Main Pharma, which has come back from $2 down to $1.10. Again, if you look at the next 3 to 5 years, what the company's investing in at the moment in terms of both its generics business, in terms of all the new products coming out, as well as its contract manufacturing, there's a lot of upside in that business in the next 3 to 5 years. Companies like Pact Group, the packaging company, which has got into contract manufacturing. It's competing in pallet pooling with Brambles. It's just won a big Woolworths contract. It looks pretty good the next 3 to 5 years. Ansell, which has just sold off its condom division for a huge price. It's now completely debt-free. So there are businesses out there, Pete, whose medium to long-term outlook we think looks pretty good. And when you look at the valuations today, they're certainly not expensive. If anything, they're beginning to look quite cheap, So, so the market is coming off. I think short-term news tends to be, in many share prices, it tends to weigh very heavily on today's share prices. As you mentioned, some of those stocks like JB Hi-Fi and Myer itself, So, look, we think there is value beginning to appear in the market at the moment.
Okay, well, I know I might have asked you some hard questions, but, gee, you came up with some really good quality answers. Thanks for joining us, Anton.
Pleasure, Pete. See you soon.
See you soon, mate. That's Anton Tagliaferro from Investors Mutual. Coming up after the break, we'll be talking to Matt Ball, who heads up SMB or SMEs for the company Optus. And they've got an initiative out there. He reckons he's becoming a disruptor. Let's just see what he's up to.